All right, we got some news on Wells Fargo. The Justice Department is indeed probing the company's wholesale banking unit. This has been called into question about deals and all the rest. But we're going to expand on this a little bit more. But Wells Fargo stock, even though this was expected that they were going to go ahead and investigate this, just on the word of that, the stock down 1.5%. Now, something that's been rattling banks way beyond Wells Fargo has to do with these emerging markets and some of the problems they're having right here, the tariff fallout effect on China and everyone else. Then you got Argentina imploding, Venezuela imploding. That brings us to Wall Street Journal Associate Editor John Bussey, just returned from Madrid. He's here, happy to say, safe and sound. We've got some real international issues roiling us now.
Yeah, here we go again, right? With the emerging markets, it seems like it's on a cycle of every 5 to 7 years we have this discussion. And in this instance, there's some macro issues and some lesser macro issues. The big macro issue is that interest rates are going up in the U.S., right? We're doing well. Dollar's strong. The government's willing to pay you a little bit more if you lend it money. So if you're an international player, where are you going to put your money? In an economy that's a little bit more stable, where there's rule of law, and where the returns are starting to get better in the U.S. And where are you going to take it from so that you can put it in the U.S.? Guess where? You're going to take it from the places that you chased when U.S. interest rates were rock bottom. And you weren't getting paid to lend the government money. So you went to places like Argentina, and you went to places like Indonesia, and to Turkey, and you lent money there, or you put money into bonds there. And that money's coming out. And then, like in the past,
Argentina, been there, done that.
Yes,
sold that, right?
Yes. I mean, Asia financial crisis,
right.
The Mexico tequila effect, the Russian, we've been through these iterations of this, and Argentina, as you point out, many times. So
are we exposed to this? If people have to look at this, how does this affect me? I'm not invested in Argentina, what have you.
Yeah. Well, whenever this happens, it's not good for the markets. Globally, it kind of rattles everything. Europe is more exposed to it. Where I just came from in Spain, a lot of the Spanish banks have money out to Indonesia or to Turkey, right. And so when problems really kind of get going there, the banks in Spain are wondering whether they're going to get paid back, and that pushes down the entire market. So those are the big,
a domino effect.
Yeah, that's right. So there's this rebalancing of where the money is going, and the world's kind of coming out of the emerging markets, going back into the U.S. because you can get better returns here. And then there are the lesser macro issues, which you were pointing out. You've got a trade war with the United States, a trade spat with the U.S. that this week, if in fact the U.S. puts tariffs on this very large amount of Chinese goods that come into the U.S., and that the Chinese do as they say they're going to do, they respond with their own tariffs. You have a dislocation globally in sort of economic trade.
What if you avoid that? And there's this wisdom. I don't know if it's wisdom, John, that the markets tend to give the president benefit of the doubt, that the Europeans can make promises they're going to buy more agricultural goods or what have you. And problem goes away. Or we have this agreement with Mexico. Problem goes away, at least with them. Canada joins on. Problem goes away. And cooler heads prevail. Is that the view you were getting there? Or they're saying, no, it's not that simple?
Or not, or maybe that doesn't happen. And you would think that it would, right? And it's kind of the data points up until now suggest that it might. Or it doesn't. And it doesn't happen with China. And if you're an economy in Asia that has really played the China bubble, you have really surfed that incredible growth rate in China. And now you're looking at a China that was already organically slowing, possibly slowing even faster as a result of a trade spat with a huge customer, the United States. Everything seizes up. Your economy, your stocks begin to drop because you're going to be seen as a victim of this bigger trade war, and that's already happening. So the markets are kind of getting way out ahead of this, and they're trading down Asian stocks, and you're seeing that in this emerging market tumult as a result of the possibility that what you're describing doesn't happen, that there isn't a resolution.
All right, Donald Trump has always said that's their problem. It's not our problem. The wind at my back is this economy, these markets. We're getting good deals. All's right with the world.
Yeah. Well, if there's real global tumult, then all's not right with the world, and the unintended consequences, we don't know what those might be yet. Is this on the order of what we saw in 1997, 98, 99 in Asia or in Argentina? Yeah, there's some similarities. There's a lot of dollar-denominated debt that these countries have taken on, that suddenly the service fees for that are rising because interest rates are going up in the U.S.
That's one thing we learned with every one of these crises. Remember with the Thailand baht, in '97, then we all discovered, hey, we're exposed to this. And are we significantly exposed to this? I guess unless it really spreads, no. But for the time being, what do you think?
Yeah, for the time being, no. That maybe this is a rebalancing that's going to sort itself out with those countries that have put themselves at greater risk, Turkey, Argentina, with dollar-denominated debt, getting more pain. Or if this trade problem grows, if the sanctions with Russia take an enormous toll on the Russian economy, maybe we're going to see a more serious results from this globally. So far, the U.S. is a bright spot, right? It's a vibrant economy. There's a reason the dollar is strong. There's a reason interest rates are going up here. That's a good story. They're going up for the right reasons.
Well put. John, always good seeing you.
Pleasure.